Hi guys, it's Henry from IHT here. So today I want to talk a bit about inheritance tax for UK citizens if they've got a foreign spouse. So it's one that I come across quite a lot. Circumstances, a lot of people have foreign spouses, and a lot of the times the foreign spouses are predicted to outlive their partner. So I want to touch on this case. Obviously, inheritance tax for UK citizens goes with them worldwide on their worldwide assets. It's the only tax that follows that rule. The current rate as of 2021 is 325 with a residency, if the residency is in the UK, of 175. So that can be brought up to £500,000 of what they can pass on. So here's where it gets a bit technical. If they've got a partner, if the partner is UK domiciled or UK citizen, they can pass that on completely tax-free to their spouse. And then what happens is if when their spouse passes on to their children or whoever, then doubles up the rate. So that would go to 650, and if they've got a residency, it goes up to 1 million as of 2021. So that's the current tax rate that then it can be passed on, and then when the spouse dies, it can be passed on to the children or whoever. So what happens if you've got a foreign spouse? Now, if you've got a foreign spouse, this is technically where your rate kind of lies with 325,000 GDP that you can pass on tax-free. But there is some differences of how you can set your estate up so it can be more tax efficiently. So if you have, for example, a US partner, you can put the assets in their name and they've got 11.3 million inheritance tax name. And also a lot of countries don't have the inheritance tax that the UK imposes. It's one of the few countries that imposes it, more so on worldwide assets. So there's ways you can structure your estate planning to target that specifically, that it can be passed on tax efficiently. What are the ways? So we've talked about this in a few videos and a few of the articles. What are the ways to pass it on efficiently? One that is quite common, a lot of people come to me that I'm not a big fan of, is declaring yourself non-dom. Now, somebody came to me yesterday, he had quite a bit of wealth, around £3 million. He'd taken it most out of the UK, but he still had around a £750,000 SIPS in the UK, domiciled in the UK, and he was like, I'm not registered in the UK. And technically, your jurisdiction is at the discretion of the taxman, and if you've got something in the UK, such as a SIP, a bank account, or any form of property, they can use that against you for inheritance tax. So just to make that clear. As far as the other one is gifting. Now, this is a much more popular option and much more feasible for proper estate planning. So if you were to gift the estate, you've got a 7-year time frame, and from years 3 to 7 it goes down from 40% to 8% each year. So from 3 at 32 to 4 24, and then so on, down to 0 if it's done within that 7-year time frame. And this can be done through life insurance, trust policies, or a number of bonds. You do have an exemption of £3,000 tax that you can gift each year, and you can gift to 2 people, so £6,000 gift, and unlimited £250 gifts to any number of people if you wanted to give to hundreds of people. So just to touch briefly back, the best way to do is to set accordingly your estate planning so that it's set up that you won't get taxed. If you do have any questions, or you do have a foreign spouse that is a bit younger of you, you want to make sure you've got it properly set up, feel free to get in touch at info@investmentforexpats.com. Thanks.